Hello, founders. We are live. Welcome to Startups.com. We have a great show for you. We are here every Tuesday, Wednesday, and Thursday. Before I jump in, just want to introduce my co-host. We have Q joining us, Jen as always, and today our guest advisor is Greg Welch. I'll let him introduce himself in just a moment. But before we begin, I just wanted to share some really interesting things that you might want to check out if you're here joining us, and that is on the Startups Therapy podcast. Startups Therapy podcast is our CEO and Chief Marketing Officer, Ryan Rattan, Will Schroeder and Ryan Rattan. They sit around and they basically talk about all the things that founders usually do not talk about. They don't want to talk about. You're not going to get in typical conversations, and they get right down to it. It's a no BS look at what startup life is all about. You can check out the Startup Therapy podcast. It's all over the interwebs, podcasting, whatever your favorite program is, and of course on our website at startups.com. Let's jump into the show, and we've got Greg is joining us. Greg, how about you do the honors and introduce yourself, give us a bit of your background, what you're working on.
And Greg Welch here. Hey, everybody. I am a 15-time founder, 6 exits, and I'm working with a cybersecurity company right now. I've been in the telecom world, tech world for 35 years, and the 15 startups and the 6 exits just means that a lot of crazy stuff has occurred and I've dealt with, and lots of problems, some solutions, had a lot of success and had some failures as well. And I think that's really the big thing is looking at the successes and the failure.
15-time founder could possibly possess you to keep doing it 15 times, Greg?
I don't know. That's such a good question. Every single time that I say that I'm done, or every time I've had the great opportunity to go get on a beach somewhere, my total extent of boredom is 3 months. I can check out for 3 months. And then I go insane. I'm calling people. What's going on? What can I do? Start thinking about what's next. And it's a sickness. It really is. And I love all the stuff that Will's done on content about. I mean, startup founders pay themselves last or don't get paid. We continually put money into things that will never come back to us. It's a unique characteristic of a human, and you can't really teach it. And I love the term pretendapreneur, because there's a lot of people that think they want to be startup founders, but they don't quite have the guts and the grit to finish it and follow it all the way through.
I call them entrepreneurs. That's how we affectionately refer to them. Nothing
Exactly
wrong
right.
with that. Yeah, like entrepreneurs doing small businesses. Now, I think this is a good conversation. We can say there's a difference between doing a small business, which you can do really well in. You can go and make 10, 20, $30 million in a small business, and that's great. And then there are startups where you're trying to disrupt an industry, make to $100 million, be a unicorn, technology, big margins, software eating the world, all that stuff. What do you think it is, Greg? Like, what was it like for you? Like, you kind of had your moments where, let's say you've exited, you could sit on the beach if you wanted to. Is it wanting to solve another problem, another challenge, sheer boredom, someone ropes you into it? Like, what drives you to pick up another startup? Because it is not easy.
No, and look, I think it's all the above, right? I think startup founders are probably the worst people to go and try like buy a car, right? We'll say yes to anything. I'm that human, right? Like people have an idea and I want to immediately get involved with it and spin it a different way. Look at, what I see wrong with it, how we could tweak it to make it better. I think that's the common scenario. And what I found actually is, through the failures in a lot of ways, is that I need to stay in my lane. I mean, I've been in the telecom world, in the technology space, building platforms, doing certain things, and I'm really good at that. When I get off into the weeds on other technologies that I'm not an expert in or not familiar with, that's where I have the most amount of issues. So, I've learned the hard way that I got involved in a men's health type company, and I've never been in men's health aside from being a man and trying to stay healthy. But literally, I learned more than I ever expected. I did have some great contacts, but it was just not my wheelhouse. So when I go back into technology and, again, like I said, platforms and building things at scale, whether it's SaaS or even hardware, that is where I have my bearings. I know the engineering team to bring in. I know, the bogeys that, are in front of me. So, try not to make those massive mistakes constantly.
I want to talk about your current startup in just a moment. And for everybody in the audience, if you are joining us, please feel free to put a question in the Q&A box. We have the lovely Jen who'll be watching the chat in the Q&A box. We'll make sure that we get your questions answered. If you have questions for Greg, as well as questions for us in general, we're happy to answer those. But Greg, I want to talk a little bit about your investor experience, because what happens, and we'll get to your current startup in just a moment, but what ends up happening is typically, and this is what I did, I exit, you get a little pile of money, and you empathize so much with other founders. You just start writing angel checks, and then sooner or later, someone ropes you into like a little bit more of an involved investment. I've spent time as the general partner for a fund, and different things, raising money, all those things. You've also gone that route and had that experience. Share with the audience and everybody sort of what your path has been as an investor.
Yeah, I mean, exactly right. So like, look, it started with friends, and to your point, other people you can commiserate with that needed to raise capital and you wanted to help. So you wrote a check. And then, the money evaporates sometimes, or sometimes it actually comes back in spades. I think like what I was saying before, it's like, that's where I found like my wheelhouse. Like, I'll only invest in companies where I can pick up the phone, where I can make a difference, where I can drop into a role if needed, worst case scenario, where I can actually enhance and benefit the company. And that actually is what I've learned enhances and benefits my results as far as an ROI. If I'm investing, I can get my money back or make money.
Yeah, it's called smart money, and that's the type of investor. So I take it you're typically involved personally in terms of the early rounds. I can see you being a prolific angel and helping out. But then you also went on to launch, I believe, the Capital Factory there in Austin, Texas. What was that all about? And then I'd love to hear your insights as to why not stay an investor? Like, that's just, for a lot of people, they think it's the cushy job, but I'm curious the reason you don't stay in that lane. You went back to being a founder.
Yeah, I mean, I think, look, I'm an operator. I mean, I can really break things down. I love to get in the weeds of things and be able to make decisions. And not, I think earlier in my life, it was control issues. I'm trying to have control.
Sure.
You learn the hard way with those things as well. When it's, kind of put in your face many, many times and you make the wrong decision. But look, I mean, I love the role of investor, and I actually even thought about starting a fund and kind of went down that path for, almost a year and realized that, look, I don't want to passively, be involved at a board level or an advisor level in, if I'm going to put money into something. If I'm going to put money into something, I'm going to start it. I'm going to work on it. I'm going to bring in the team that I want. I'm going to, accelerate it that way. And that's really, how and why I decided to, keep on founding companies. And Capital Factory, amazing, group. I mean, Josh Baer, the founder, amazing guy, the epicenter of all Texas. And that's what Josh wanted. He started in Austin, Texas, became, Houston, Dallas. I mean, it is truly the epicenter. When you go to South by, it's always the kickoff party on Thursday night. It's always, a great place to congregate in the space. And that's what I help with. It's funny, I was trying, when I first moved from LA to Austin, I knew I wanted to meet Josh, because I was like, what's going on in Austin in the, kind of startup ecosystem.
Sure.
And look, this is back in 2010. So before kind of the California exodus to Texas. And I didn't get with him. I was on a JetBlue flight from Austin, Texas to San Francisco. And I look over and I'm like, hey, are you Josh Baer? And I was on JetBlue. We were up front, and it's like 2 seats over. I'm on the aisle. He's in the window. It was him. We talked for 4 hours, and that's how it works. And then got together back in Austin, and then did Capital Factory to space. And that just really changed the whole idea and, really revolutionized what they were doing.
Okay, let's talk. We're going to bounce back and forth. Let's talk about your own startup right now. Curious, don't want to, bury the lead here, but how's your capital raise going? We've talked about that in the past. Give us an update, but then also just share a little bit with everybody what you're building right now.
Yeah, I mean, so a company's called Cyberprotonics, and the whole idea is that we've invented a new type of encryption algorithm. And basically, it's post-quantum, meaning that quantum computers that come online in the next 2 years, 5 years, 10 years, whenever that may be, we're saying that our strength of encryption cannot be broken by one of these new quantum computers. And the reality there, just from what this is, I mean, I walked the floor at like an RSA or a Black Hat type, security conference, and the mindset is like half the companies are saying build a big wall. Mm-hmm. The other half the companies are saying monitor your network, make sure the threats aren't coming, all these great things. And those are really, really important things. But our mindset is you should encrypt all your data. So all data should be encrypted. So, our mantra is we take your diamonds and we turn them into coal. And even if the bad guys get the coal, they can't extract the value of the diamond. So, we believe, and we build something really strong and really lightweight, so we can put it on really small IoT devices. So this won't slow down a database. It won't, degrade from an IoT device. Think about satellite ground terminal or IoT SIM on a cell phone, or in a Tesla, you got a SIM that pushes the data back to Tesla. That's what we encrypt. And we do it so strongly that nobody else can take that data and do anything with it, even if they steal it.
That's great. And how is that fundraise going?
Yeah, it's been the hardest one my entire life. And you would think as you do this many, many, many times that it gets easier and easier and easier. And I would say in some ways it does, but it's a different world out there. We were doing pre-seed, so before revenue. We signed a bunch of contracts with customers for a bunch of revenue. Investors were saying, not that they don't believe, but show me. And, you just have to keep on funding the company yourself. So that's where we are. 2 years later, I'm still funding the company. And we are working. We're very close to wrapping up the round, but you've talked about this in some of your pods. I mean, we went from a $10 million seed raise to we were now doing a $4 million raise. And I've got, 2 million of that committed. We got another 2 million we're dancing with to bring in to finish the four. We'll use that money to really finish some technology we're finishing for key customers, launch, monetize, and then look at doing an actual A round, which is the growth capital.
Let's talk about, for the founders out there, the reason it's hard right now. And I'd love to hear your perspective. Let me set the table, because so many of the founders, you meet them here at Startups.com, which you're a community leader and advisor, and a very generous by the fact, and very happy to collaborate with you there. But right now, we're looking at several conditions. We're sort of at the bottom. I believe that we're starting to see the bounce of the bear cycle in the investment market, but IPOs, nothing to really speak of, and that's really a good indicator of what's going on. The cost of capital is much higher now, and everybody's sitting on bated breath waiting for the Fed to drop interest rates, because when the interest rates were basically zero, then you had lots of capital and people wanted to put capital to work. If I took, let's say, $100,000 and I just put it into the NASDAQ relative to the average return of startups, I would have made way more money. So nobody wants to invest in this speculative asset, this alternative asset that's VC and that startup. And then just in general, it's like this new normal is going on. And sort of, I think everybody's just waiting to see what this new normal is. AI is disrupting everything. You got NVIDIA that's sucked up all the oxygen in the room. What other factors are you seeing out there, Greg? Like, what would you be telling founders when they come to you and say, it's super hard? Because you yourself, you've raised 9 figures plus, and I've done that before, and I can tell you it's way easier in 2021, as I'm sure you've experienced in the past. So what are you telling founders in terms of these are the reasons everything's so hard right now?
Yeah, look, I mean, I think there's a lot of factors. It's kind of the perfect storm, right? I mean, I think before COVID and during COVID, and then like right after, right? We saw a lot of the companies, VCs that were in A rounds, that because, to your point, the QE, all the money coming to the market, the free, the interest rates being so low, and all this money, guys that were pure A round, B round, C round guys had to come down into seed in order to be able to get into the deal so they could then follow on with the A. Mm-hmm. All right. Tiger Global put $9 billion into seed capital with an algorithm that would write term sheets to investors based on public comps, and they lost almost all of that $9 billion. Right. I mean, so the venture capital market in a lot of ways is going through this crazy change also, right? I'm not going to say renaissance because it's not that sexy. It's actually, all of the tourist funds, these $10, $25 million funds that existed are gone, right? They all invested in early seed. They couldn't get any follow-on capital. They were gone. That's the fact. I can point you to many of them, friends of mine. It just didn't work out. And then all of your seed guys that said, hey, we're so early, we'll write the first check, which is kind of comical now, moved up into A, right? They de-risked this concept. They moved to A and let's go later stage. I mean, again, not to knock VCs, but I love when you look at the placards on some of these VCs websites of companies and deals they've done. It's like Airbnb and Uber and Box and right? And I'm like, okay, when did you get in that deal? Oh, you got in the C round. Oh, sure. Okay. You weren't the seed investor, right? I say that to this community because, we're all going through these hard times together. You've got to figure out specifically who the investor is in your kind of technology, who the expert is, right? Because most VCs in some ways are generalists. They'll bring in experts to really do the deep dive diligence, and they are risk averse at their baseline. So anything that doesn't check the box, they're out. So, and revenue is one of those big things now, right? I mean, like I said, the seed guys who say they'll write the first checks, I've had those conversations hundreds of times. Oh, you're too early. Well, what do you mean I'm too early? You said you will do pre-revenue deals. Well, yeah, but we want to see traction.
Sure.
Well, okay, revenue? Yeah, revenue. Okay, so you're not really, pre-revenue. That's hard as a first-time founder to understand what and how you're being played. I push back. I start my pitch meetings now, with kind of like, tell me about the last seed investment you made, and tell me about how you helped a startup move the needle. Like, I mean, I actually put them back on their heels, and it's kind of fun, but it's different. I mean, I do that. I'm not worried about if an investor says no to me. I'd rather find the right investor than waste my time or theirs.
Yeah. On top of which, you've got founders who figured out, hey, I want to be a founder during the fun times up to 2021, 2022. So it's a shock to the system. They're like, wait a second, that's not what TechCrunch told me was going to happen. Like, I can go raise without, I get hit every day by people who are pre-product, pre-revenue saying I need to raise money, and just saying it just doesn't work that way anymore. It's so much easier to do a startup. On top of which, right now, I think something that everybody has to acknowledge is that AI has sucked the oxygen out of the room. So right
Oh yeah.
now, all the money has to chase AI because and you need all the engineers and like it's just a different game. And it's going to spill over later on because the AI is going to eventually, peter out. But people are still investing in AI and looking at these companies to figure things out. But you're talking about AI engineers making $250,000 to $500,000 right out of the chute. And so it's a tough game right now unless you've got all that going on. So I think that it's going to change a little bit. I'm curious for you in terms of what do you think about AI and how that's working and it's affecting the market dynamics?
Well, it's so funny, right? I mean, again, being in telecom for so many years, I mean, machine learning is not a new term, right? When you think about this technology of what AI is today, right? It's not a new concept. It's been around for many, many, many years. It's the fact that now NVIDIA and other companies have been able to increase the processor speed and do all kinds of amazing things at that place point, right? So I think we're finding these amazing ways to harness hardware technology to then compute and do all these wonderful processes simultaneously. I think AI is incredible. I think that the idea of what it is, the language models, I mean, all of it's fantastic. But the question becomes, how are you going to use it, right? I've never been, of the camp of AI is going to cut the massive reduction in job force, right?
Mm-hmm.
I mean, I think like even use the legal spectrum, right? Like the law firm, right? Yeah, I think it's going to definitely change the dynamic of hiring younger lawyers because you can have AI write sort of briefs and do a lot of the work that can be done there. You still need the specialists, right?
Sure.
I mean, the IP specialist, the bankruptcy specialist, the business specialist. I mean, they're still going to be needed because they have time either in a court or they have time, dealing with these very complex issues that is not just learned by the language model. So I think it's like anything. Like if you're too general in your job, you need to get more specific. And I think that is what the world is coming to. We all have to be very oriented toward being experts in our field, being experts in what we do, and that is what will keep your job security for a while.
This is going to date me, but you remember, right?
Sure.
Back in the day,
Yeah. Yeah.
and
Marc Andreessen. Yeah.
right. And what I think is happening is we haven't had our sort of wireless moment that broke everything open in, .com 1.0. And then then you had the Google moments and then everything for .com 2.0. I think we're still waiting for that. We're waiting for that one killer app. And I compare large language models. I'm curious if you think of the same way. I compare large language models to the web browser, right? Everyone thought the web browser, we're going to do a portal. Like I was offered some ridiculous, I think it was like $30 million right away to start a web portal back in the day. And we look back on that and that's such a terrible, terrible business model. Like you don't make money with those things. And I was paid large amounts of money to get web portals going. But I think what's happening is that everyone thought the LLMs and everyone thought the browser was the way to the internet, and we're going to invest in that. So this was Netscape, right? And then what ended up happening was it expanded, and we still use browser to this day, but it's so ubiquitous. And I think LLMs are going to be the same way, but we're still waiting for that one inflection point where I think someone's going to figure it out. And that's the reason I think money is still going to pour into AI for the next few years, and that's going to get better. But that's what I'm predicting. What are your thoughts?
Well, yeah, it's really funny you mentioned that. I mean, you talk about Netscape, you talk about Windows Explorer. Microsoft obviously was trying to wipe out Netscape. Not very much different than Microsoft now investing tens of billions of dollars in, Chat GPT and OpenAI and trying to bundle it together in a lot of the services they do. I mean, that's a whole other podcast that we can do. But, look, I think AI, I love the concept. I think that, look, as we're seeing more of these tools come online into reality, I mean, I've heard, there won't need to be any more salespeople because AI can do all that for you. Okay, look, as a salesperson, when I take a client out, when I entertain a client, it's a very, very different experience, right? I'm not even just saying whining and dining, but it's like, it's a conversation. It's getting to know families and kids. And, I love the concept about, the best sales relationships are the ones that are most personal, right? And it's true. I mean, my relationship with customers, at the highest and biggest companies in the world or small startups are all about personal connection. I don't see AI coming to that place point anytime soon. Sure, if we're trying to slice and dice data and come up with a prospect list and a pipeline and who to call, and sure, it can do all those things. But I don't see personally AI replacing what I know my abilities or my team's abilities can do to actually go get deals done. So I think it's like anything. It's being applied to various functions, right? Legal, accounting, finance, sales, all the above, to really fine tune the process. But I don't see it wiping out the need for people that do these tasks today.
Let's turn the corner a bit. I'm curious. I've actually wanted to ask this question. What these days, and let's just do an exercise. Let's say you're about to invest, or maybe you've already been making some little investments here and there, but what are you investing in, or what excites you? Like, what would move the needle for you if someone came to you and said, "Hey, I'm solving this problem. This is what I'm doing," where you would sort of, it would stir something in you to maybe write a little check, type thing. What are you
Well,
looking at?
it's interesting. It's very personal, right? I mean, I'm involved in a platform that is in the travel space that is kind of this new look of the world of kind of finding your people, right? Finding your tribe. I love to travel. I love to do things. I'm in the city. It's like I love to go to Tahoe. I love, going all over the world, whatever it might be. But sometimes, depending on, whether you have kids, don't have kids, your kids are, you're an empty nester. Sometimes in the peer group of your friends, I'll tell friends, let's go to Tahoe. It's like, oh, we got, soccer games this weekend. Or we have this weekend. Anyway, this is a travel platform that will bring together like-minded people for travel experiences. Whether it be rent an Airbnb, 3-bedroom, 5-bedroom in Tahoe, and it brings people together to do that. I'm hosting one for Formula One in October in Austin, right? At Formula One. So we're doing a place, got all kinds of like-minded people from all over the world that are coming to Austin for the Formula One race, and we're all enthusiasts. We're all going to hang out. I've never met any of them, but this platform allows for this social interaction, which I find really fascinating and exciting. That's something that got me excited because I'm in a ski lease, every winter, I do, things with people and want to collaborate. The same goes in technology. I mean, when I find an entrepreneur that has a niche market that I could take to, say, AT&T, or I could take it to, another carrier or cable company that I know that I feel like it's something they need, that gets me excited because I love to sell. That's still what I feel like is, as a CEO, you got to do a lot of things, but I love deals. Yeah. When I get on the startup where I feel like, I can actually make an introduction, get a deal done, that's still exciting to me and is worth, writing a check.
What's really got me going is the creator economy. And like you said, it's all about your experience. And I'm just so fascinated. My son's a creator. I owe a lot to social media for the success that I have. And I've been an influencer, all those things. So when people are doing things in the creator economy, and we have someone in our audience right now who's a big part of what I do, shout out to you, Doug and Time Bolt, but that's where we start to go. And I think this is a good lesson for all, and you brought this up earlier, Greg, is go and find the investors that have got that intense experience and that desire to solve problems in that space. That's a really great way because you can capture their heart versus having to go through the whole VC route and apply and go through all those things where they're just kind of looking at it by numbers. If you tug at the heartstrings, you get someone like Greg who will pick up the phone and call on your behalf. That's a big win.
100%. I mean, that's the key. I think that is, that's the new, I'm not going to say the new way investing, but it's the new way that I'm looking for investors. They've got to have a passion, right? I mean, I found that family offices in our cybersecurity space, we've dealt with some family offices that are really, really loyal to our armed services. They're patriots. They love this country. They want to protect this country. It's like, okay, cybersecurity is protecting our country. So it's a very different, to your point, right? It still fits the thesis of their investment strategy, but it gives that personal connection, which is what you're trying to do with an investor. I mean, I hear all the time, oh, should I pay people to make introductions or should I pay people to go raise capital for me? Here's what I would say. In my 35 years of paying people to go raise capital for me, which I've done that a few times, it has worked 0 times for me. Donut, right?
Me too.
I got suckered in. I wrote a check because I felt like something could happen. Doesn't work because guess what? They can't pitch your company the way you as a founder can. They're not passionate like you are. They don't understand the problem, solution, TAM. I mean, they just don't understand it the way you do. Now, look, that's different when you're raising a C round, D round, going public. I mean, you bring in the investment bankers, and that's a very different process. But when you are a founder in a startup raising seed capital, early stage money, no investor will ever write you a check unless they talk to you, probably meet with you, get face to face, and ask the hard questions. They want to understand how you're going to take care of their money that they work so hard to earn. And that's a fair question. And if you don't have an answer like that, you better get it. You better figure it out.
Well, that's to my point. Not only that, I want to see the founder have gone through the struggles of where to get the answer, to go through those things. If they just ended up paying someone to do it for them, I start to doubt for when things get really hard and they really have to build and they have to go to that next round or competition pops up, the market starts to change. Are they relentlessly resourceful enough to have solved those problems? If a founder can show that they are resilient up to that point in time, man, I'm more excited to write them a check.
I totally agree. And I got involved in another startup recently, the same exact thing. I tested the founder, right? And they were going through a really horrible, horrible situation with an investor. And I was like, how did you let this happen? And that was the question. I didn't shut up, right? Because I was trying to understand, what were you thinking? And it was this very emotionally intelligent answer of, I messed up. I was so excited about my dream. I felt like this person could solve all my problems and I was wrong. And I mean, I didn't want to hear like, some BS answer, right? Hearing that answer, I thought, okay, this is a founder that I think I can coach, mentor, work with, help. I mean, that's all we all want, right? It's like you want like-minded people that can support each other. And I want to work with people that, look, I don't mind arrogance, attitude, ego, but on the flip side, I want somebody that's like, look, who I am. Like, I am super opinionated, but guess what? If you bring me data, I 100% will listen at it, reevaluate, and in most cases, change my opinion based on that data. Yeah, and that's what I'm looking for in a founder.
Absolutely. Not only that, if you can bring data that provides a unique and novel insight, like, you and I, we sit on these open pitch practices and I get to enjoy you giving feedback, listening to your perspective and all those things. But if you can get to the point where I see you kind of go, oh, I didn't know that. You kind of learned something during the pitch and I learned something during the pitch. Like, that just goes so much further. So I appreciate you being open and sharing. So let's jump in. So we got questions that we want to ask. Hugh has been preparing and just doing a bit of research there. For those of you in the audience, we've had a few more people join us. Remember, if you got any questions for Greg, put them into the chat or put them in the Q&A box. But let's load it up. Hugh, what's a good starting question just to spark the discussion that you've got for us?
How should founders approach potential investors when they have no product yet, just an idea and a vision?
Ooh, good
one.
I
mean, so look, we've talked this a lot. Look, I think one of the best ways, the best kind of strategy is to, find someone that you think can enhance your idea, that, may be the right investor, and ask for their opinion. Frame it as, not, I want to pitch you an investment. I want to, get your money, but pitch it as, I respect you in the industry. I know you have a lot of knowledge in this area. I'm thinking about this new idea. What can I do? I had somebody from YC, literally a couple of weeks ago, ping me on LinkedIn and say, hey, I want to pitch something to you. I would like your opinion. And that's what it was. 15 minutes. I gave my opinion. And afterwards, like, thanks so much. And it helped formulate his idea. And, they're building something new. So I think everybody loves to have and give their opinion. And when you kind of put it that way, it's very approachable. It's not threatening to an investor. And in most cases, it opens the door into the edge point. If it's something that excites them and influences them, they may write a check.
It's important for those of you who are going to be watching it right now, that just like Greg said, I'm going to pull the principle out, that you do make sure that you talk to the right investor. Make sure you got the right round. So if you're pre-product, pre-revenue, or vision, you're most likely in very early stage angel and friends, family, and associates. People just love you. Maybe rich aunt who bought Bitcoin at $300 was, a profit that way, and can YOLO the money. That already set money aside and they said, okay, go with it. But you got to make sure you can talk to the right investor. Money's always there. I am watching big checks get written. I watched a $90,000 check get written the other day, just purely on passion of the founder and, a bit of evidence. But the more traction you have, we're always going to say this, the easier it's going to be to raise investment. And traction does not necessarily have to mean you have to sell, but you have to prove that you know how to go get product market fit, that you got initial interest. And if you can show investors that, they may not be ready for you right there, but eventually they'll, keep tracking on you, or if you keep staying in relation, if you've done it right, like the way Greg said. I'm curious, you brought up a side question. Greg, how many times a week do you get hit up and say, hey, can I pitch you something? Hey, can you invest in this? What's the frequency right
Probably
now?
100 times a week. Probably, yeah. It's constant, right? And it's funny because look, I used to, and look, I love LinkedIn as a tool. I have one, crazy story with a super, super well-known CEO investor who I was stalking for 2 years and finally got to him via one of his partners in his investment firm from LinkedIn. And when we got on a call with him and the team, he said, Greg, just so you know, this has never, ever happened in my career. And this person, his partner, she has never, ever responded to a cold outreach. So congratulations. And I take that as a super big kudos. Like I said, this is one of my idols in business. But look, I mean, I think, it's the way you pitch it on LinkedIn, right? Look, I get these 10 paragraphs of write-up and a deck sent like every day. And no offense, you pitch it and talk about it all the time. I mean, look, keep it simple. Engage with me. You see my profile, you can look me up. I'm really easy to find. Like, come at me. If somebody would come at me and say, I'd like your opinion, I'd say, sure, let's chat. Nobody leads that way. It's always, here's what we do, like I said, 10 paragraphs and a deck. And would you invest? And it's like, well, you just didn't even get my attention. Like, you missed the mark. And I'm not trying to test you, but it's like, I'm busy too. Give me a soundbite that's super simple. Okay, next.
I don't know what you do, but here's what I do these days. And I'm not at hundreds, but I'm averaging like one a day. Okay. I actually engaged with someone today, but I will scan the message on LinkedIn, and you know how you get a little preview, and I'll read the first line, and I will literally make a judgment call on the first line. And
yeah,
you know what gets me these days? Maybe it's ego, but because it's personalized, when someone starts off with, I watched your video on this, or I really appreciate, I've learned a lot. And then it goes into, I've had questions. So if they've actually paid me a compliment, they did some research, like if you were going to ask me, and I'm not writing big checks at all, like not even close. I'm just not in that game anymore. But if I'm going to write a 5-figure check and you're out there and you're going to sell to someone, and let's say you're selling someone a $10,000 item, you're not going to go in willy-nilly, not knowing anything about the person. You're going to ask questions, all that stuff. You're going to research. So if someone's taking the time to actually get to know me and my digital footprint and invokes that in the first line, I have a much greater chance, I would say 90% chance I'm going to open it. That's what I'm doing. What catches your attention?
Yeah, I know it's really funny. And I'll bring up two sides of it, right? So I got this note, I don't know, a couple months ago, and it was like, they wanted me to engage in a podcast or interview. And it was kind of like, my researcher has brought up your name 3 times in a conversation, over lunch. So I had to reach out to you. And the first time I saw it, I was like, well, that's really novel. I don't know if it's true or not, but that's an interesting intro.
Sure.
Now, the problem is I've got that same email like 50 times, right? From 50 different people. So whatever site that they were looking at, or whatever email tool they're using for cold emails, you got to change it up. You can't just take the form language. And that's something I would say too, right? Is look, I mean, I get, I write these canned blurb or whatever it might be. But to your point, Ed, and to our point about finding and knowing your audience, is you've got to change it a little bit to meet the need of that person. And look, that's like anybody, everybody's busy. It's like you got a shot with me quick, like get to it, like give me a zinger, give me something that engages me, right? Because I'm like everybody else. I've got a short attention span and I'm busy, and it's like I'm on the next things. But I am a person, as you know, that I want to help. I love to give feedback. I do want to help. I believe in this community. And it's funny, I say this too. All of these folks that I'm talking about, these massively long emails and attach a deck, what I respond to them is, you need to join Startups.com and learn the ropes. And I say it very kindly, but it's true. There's so much content here and such a great community, just like what we're doing here, that no one should feel like they're alone.
Well, it means a lot to get the endorsement. I appreciate you. At least you're answering. I don't even get around to answering. It's crazy how many I'm deleting. And it's like pickup lines. Like, we've got 2 young, attractive women here on this show, and I'm sure they've been hit by so many of the cheesiest pickup lines, and you just hear them over and over again. And eventually, hey, I'm not saying that, I'm going to be approached the same way that if I was like a young lady at a bar, but you really do have to come up with better pickup lines. Like, the one that I'm seeing all the time is hello, and then they've got this little box name, ha ha ha, that was a mistake. Like, just, it drives me absolutely nuts. But let's get into some other questions. Jen, do we have anything in the chat? I'm seeing a little bit of chatter there. Let's rip them right now.
Yes, we have 2 questions from Doug. One is, are you in an adversarial position with AI when you keep information encrypted from it? That's your first question.
Yeah, I mean, sure. No, not at all. I mean, what we're trying to do, look, I mean, we're looking at protecting all data, meaning we don't want it to get in the wrong hands. So we're really focusing more on the private large language models of AI. So again, I'll mention a law firm, right? I mean, a law firm, all of their intellectual property or court cases, settlements, all of the things that their lawyers have created internally at the law firm. What we look at from an encryption standpoint is protect that data. So that for some reason, and I had this, I was talking to a DC-based law firm when I was in DC the last time. They get 50 million attacks at their corporate website per month. Threats, attacks, trying to get data, trying to hack the site. which is insane for a law firm. But what we're doing is providing that encryption so that if somebody does hack the system and get the data, if it's not intended for them, they don't get to use it. Just like, the 5.9 billion social security numbers of every American, Canadian, and UK citizen that are now out in the dark web. My viewpoint of that is, well, if it would be encrypted, and even if the bad guys got the file, they couldn't collect the data. So I'm not adversarial at all. I just want data to be used by those that are authorized to use it.
Good answer. Next question.
Next question is, are companies concerned with sharing conversations and documents with AI learning models?
I mean, Ed, you can answer this too. They should be, and yes, they are. A very public example was when the entire new product roadmap of Samsung was put into a large language model January or December of last year by some engineers that didn't understand that all that data was public, and they worked very hard to try to retrieve that data. So look, I mean, it's like the internet, right? Anything that you do that's published on the internet is backed up immediately and stored forever. So AI, think of it the same way. Anything that you put into AI, don't use a name. Got to be part of your best practices, right? Is that public language models are public. So anything you put into it is a public domain.
That's the Wild West that's happening right now. Like just everything from what's copyright, you're looking at the generative AI that's using the images and the art of artists. I can literally type in, draw me a picture in this artist style, and it will go, it's learned from that, and I can recreate that. Well, who owns that type thing? So there's a battle raging on. It's totally a thing. Not going to touch that. We could debate that for an entire day is really what it comes down. And that's the reason ethics, I think, is going to be important when it comes to AI, and they're raging over that right now. Q, let's load up the next question from you.
Our next question is, given your expertise in cybersecurity, how do you see the role of generative AI evolving in protecting data?
It's a great question, right? And I think, as I just said about, not just best practices, but I think that the issue with data is that we are now at the all-time high, right? In the last 3 years, more data has been produced than ever in the history of the world, right? And that is continuing to speed up. More and more data is being, produced and consumed. So these AI models are fantastic in use. But again, going back to my premise, we need to protect the data and make sure that it is only used by those that it's intended for. So again, if a large language model is open and public and they start referencing XYZ newspaper content or some other content, we are starting to already see deals like, Reddit is, doing deals with OpenAI and all these different large language models, the New York Times. I mean, there's lawsuits going back and forth. It is the Wild West, as Ed said. And, what we want to make sure from our perspective of cybersecurity is that the data gets to the people that are allowed to use it.
We had a comment just talking about what's going to happen. It leads to Pandora's box here. And it talks about, let's go back here. If you were in the late 90s and the early 2000s during .com 1.0 and you were pitching a startup and you didn't include the internet, which was a new thing we take for granted right now, the same way that there was a time you'd never put a credit card into the computer online. And now my browser has all my credit card numbers stored. Like, it's just insane, right? It's so, like, we come so far. But if you didn't mention the World Wide Web back in the day, then, you weren't taken seriously. It's the same thing today. So startups, you have to mention AI and AI integration. You have to. It's just so accessible. Even if you're not building an AI, you have to know, I'm going to use the AI tools. We're going to integrate them. And there's a lot of plug and play that's going on out there. You are not setting yourself up for success. In fact, you will fail if you do not acknowledge and address AI somewhere in terms of your product or your roadmap. Even if it has nothing to do with it, it could be a chat robot. We're going to use AI for customer service to reduce our costs. It could be we use LLMs to research and make sure and guide us. Like, we are AI driven or AI assisted at least, and we're AI savvy as founders. Or else, quite frankly, I go, that's my first question. If AI is not mentioned in the pitch, I go, what about the AI that's going to come eat your lunch? What are your thoughts, Greg?
Yeah, no, 100%. I think and look, I think you brought it up in one of the pitch. We were talking about one of the decks we were talking through. I mean, there's two sides of it, right? I think what we're seeing in some cases is, AI washing, right? Some startups are touting AI more than they should, right? They talk about they're an AI company, but when you peel it back, they're actually a widget company, and AI is part of it, not the core, technology, right? So I think that is something and we're seeing more and more investors kind of call BS on that, right? So I don't think you should wash anything with AI, but you're right, Ed. I mean, look, it is a tool, right? I mean, it's no different than, look, I'm as old as you, right? And you think about mobility, like, I didn't have a cell phone when I was a kid. Now cell phones are everywhere, right? Just like the internet, right? I mean, if you weren't talking in the 90s about what you're going to do with your web portal, how you're going to build tools via the internet, I mean, even if it was intranet, right? That's how old I am, the internet. So like, you have to be talking the talk. And just like mobile was the same way. What's your mobile app strategy? What's your mobility strategy? No different now. What's your AI strategy? You have to be able to address that in every business. Because look, I mean, what's so great about AI is it can help the DTC company, it can help the hardware company, the software company, and it can help SaaS. I mean, it can be implemented in every phase of every startup.
Let's jump in to sort of the fun part. This is where we kind of take a look at the story that's happening on the internet. Q brings us some interesting ones to talk about. We just riff on it, Greg. It's always fun just to get your opinion. Q, what do we got?
So today, what we have is an article titled "The Founder Building a Wealth Management Product Her Grandmother Would Have Loved." So I'll get that up on the screen here. So basically, this article is about a lady named Mikal Jean-Lise White, and she created Wealthmore because she was fed up with how traditional finance keeps most Americans out of the wealth building game. With the $5,000 minimum, Wealthmore connects people with advisor-led portfolios and financial planning services, aiming to make wealth management accessible to everyone, not just the top 1%. Inspired by her grandmother's struggles, Mikal's platform has already raised over $1 million in pre-seed funding and is gearing up for a full launch by the end of the year. What do you guys think?
Well, I think it's amazing, right? I know a person I know, Brad Gerstner, is pushing for kind of the new kind of investment in every human. So basically, when you're issued a social security number as being born as a child, you should also get a bank account that has some money in it, right? That starts growing. It's amazing to me the amount of wealth in this country and that chasm between the haves and have-nots. And it's amazing to me how just like this woman is saying, which I think is fascinating and really cool. Everybody should have the opportunity to invest, right? Or at least understand the market, right? I mean, if somebody had $50 in an account in, say, the stock market, they would have more interest in the stock market, right? They would learn more. They would try to educate themselves more. That's across any socioeconomic group divide that may be. And I think that things like this are amazing, because one of the things I think is lacking in our schools in the U.S. is like, I mean, I remember when I was in like 8th grade, I think I had a class where it's like they taught you how to write a check. And they taught you how to open a bank account. And I mean, that doesn't exist in today's world. Like, school is not teaching you fundamentals of how they don't teach credit. They don't teach how to acquire things and loans versus a lease on a car. I mean, I think there's fundamental things in our lives that these tools should help us learn more about at young ages.
You know what I like about this story is big TAM, but it fits in between. And this is what I want founders who are watching this take away from this story. Is you look at the market and you look at who's being served and who's not being served. And when they're not being served, if they're underserved, underrepresented, underestimated, what do they end up doing? So let's take a look at financial wealth management. And I've been around a lot of fintechs in my day. And you've got these big portfolios. So I know some very, very, very well-off financial managers. Like, they do extremely well. And they manage like $10 million at a time per person, right? That's the level of wealth that they manage. And so you've got this white glove service at the upper end. And then the people who don't have that money, because you're just not going to make enough commissions as financial advisors. Someone brings you $5,000. So what do people end up doing is they go to the do it yourself. And that's where the Robin Hoods, that's where up here in Canada, we got Wealthsimple. Like, you've got all these tools that are going to help you, and now it's automated. But then you've got this middle group that's been overlooked up to this point in time. And I think technology making it easier, where now, what about the person who only has $5,000 but doesn't want to punch their own buttons? And Jen and I, we talk about this all the time. Is how do I teach you to punch the buttons? I like to punch my own buttons, but not everybody wants to do that. And so how do you serve them with the same level as having an advisor? And so there's this gap right in the middle. You got the people with big money on this side, and you got the do-it-yourselfers. And then I want someone to do it with me. Not necessarily do it all for me, but do it with me. And how do we make that cheaper and more accessible? And that's where I think this startup is sitting. But here's the curious question, and this is where, Q, you do some more research on this. But let's just call out the elephant in the room. We're talking about racial disparity, income inequality, another big, massive TAM, very important. And so, Q, what's the sentiment out there with this story in terms of, hey, this is for people who are experiencing that racial inequality? Like, is this a major driving factor or what's going on?
It is a major driving factor for Jean Lee White, who created this concept. She was basically talking about how her grandmother was very knowledgeable with finances, and she didn't feel her grandmother had the resources at her fingertips to be able to take advantage of all of the knowledge that she had. And she was feeling like if we had something like Wealthmore back in her grandmother's day, she thinks that her grandma would have been further along and her family as well.
That's the type of story that really speaks to investors. And you know what? This is a good term to think about. That's founder market fit, right? She understands her market. And I look at that. Like if I've got someone, who doesn't fit, let's just say the regular white guy, okay? Just going to say it, right? And they're saying, I'm going to go help people of this particular race or orientation or this underserved segment. And there's no connection, there's no identity, and there's no past, there's no domain expertise. To me, it's not there. But the chances significantly rise when you say, hey, I can relate to these people. I've got a story that's driving me, and I actually look at that. So that's one thing that stands out for me, Greg, when we're doing these pitch competitions or these pitch reviews, is when someone can tell me they have personal connection to the problem they're solving, I start to get a little more excited. What about you?
Yeah, look, I mean, there's no question whatsoever, right? I mean, that personal connection, and you're right. We hear these pitches where the founder starts off and talks about, I lost someone to this disease, or I was involved in this, or this happened to me, or when you can relate to them, it's like that instant credibility, right? I mean, it's like you've got a doctor that says, I'm a doctor, I'm board certified in this. You say, okay, I trust what you say, and that on that topic. So, as founders, we've got to find that position, right? I'm passionate about this. I'm, in the cybersecurity space. I mean, look, I've built platforms that have been hacked by cybersecurity, hacks, right? So I try to talk about that in some of my presentations. Like, look, I built this platform, we got hacked. I had an employee who took the data and put it on the internet and was trying to hold me hostage for $10 million. I mean, it's a relatable story that, can connect it and bring it through. And I think that's always the way to get to my heart.
100%. Well, we are out of time. This has been a great discussion. Jen predicted, she said, this is going to be a great conversation. I was like, yeah, we can just gab back and forth. We could do an entire day of this, Greg. Appreciate you coming by. I'm going to give you the last words. How can people connect with you? How would you like them to connect with you? What's going on with you? How do they connect?
Yeah, look, I mean, I'm on a mentor at Startups.com. You can find me in the Slack channel. You can look me up on LinkedIn. My email address is greg@cooperator, COOPORATOR.com. We'll put it in the text. But look, reach out to me. I'm here. Please be patient. I too am running a business, raising capital, working with other startups. I will 100% respond, but sometimes it's not instantaneous. So that's all I would say. It's never going to be a long time, but I will get back to you.
Very gracious. Greg does an AMA with us once a month where you can come and blast him with any types of questions. He also sits on our panel as we do the open pitch practice, like you see, if you're part of the Startups.com community. Thank you, everybody who joined us in the audience. Great questions. Thank you, Q. Thank you, Jen. As always, we are here every Tuesday, Wednesday, Thursday at the same time. Of course, you can check us out at Startups.com. Thanks, everyone. This has been Startups.com Live. Have a wonderful day.